Hi there, welcome back to this channel. For those who've been here before, if you're here for the first time, welcome. Now in today's episode, we are going to be talking about treasury bills, investments in treasury bills, specifically the elements of interest rate fluctuation risk. Well, treasury bills, like I've told you before, is investment with government securities, right? And what risk do they carry? What interest rate risk do they carry? We are going to explore that in this video, but before we do that, please press the subscribe button if you haven't. Give me a thumbs up and let me know in the comment section if you're holding any treasury bills, if you have invested in treasury bills, or if you haven't, what do you think about treasury bills, especially in comparison to treasury bonds or in comparison to investments with money market funds? All right, now let's get started. Treasury bills, like I have said, is investment with the government of Kenya. Treasury bills is more like lending money to the government for the government to carry out its budgetary allocations, and in return to you lending money to the government will be paying you certain interest, right? Unlike treasury bonds, treasury bills are sold at a discount. At a discount means that when you are investing, say, 1 million at 16% for a period of 1 year, your interest on that investment is going to be 160,000 shillings. All right? So when you're investing 1 million, CBK will pay you, you'll remit to CBK 1 million being your investment amount or the amount that you're bidding, less the 160,000 shillings. However, they are subject to 15% tax. So you'll be paying plus the tax amount, okay? Unlike the infrastructure bonds, which are not taxed. All right. So then what is the interest rate risk in treasury bills? Let's have a look at this scenario. During the year 2024 or this year, in August, I would like us to run an interest rate comparative from the period August, September, October, and now November. But before I do this, I would like you to remember that treasury bills are auctioned weekly. So literally every week we have treasury bills. We have a bill on auction and the results for the prior week's auction. So for the purpose of this video, I'm just going to take randomly one bill or one treasury bill auction each month for the month of August, September, and the month of November, so that we have a look at the interest rate fluctuations that we're talking about, right? So in the month of August, the 91-day treasury bill was auctioned at 15.794%. The 6-month treasury bill was auctioned at 16.6686%. And the same week, the 365-day treasury bill was auctioned at 16.8592%. The next month, September, the 91-day T-bill dropped from 15.79 to 15.7183%. We also witnessed a drop in the 6-month treasury bill and the 1-year treasury bill. The same trend was witnessed in October, where the 91-day treasury bill now hit the 14% mark at 14.4321%. The 6-month treasury bill dropped from 16% to 15.1467%, and the 1-year treasury bill also dropped from 16.7999% to 15.4691%. What happens in November? The rate reduction continues. The 91-day T-bill now drops from 14% to 12%. And the 181-day T-bill dropped from 15.14% to 12.2%. The 1-year T-bill drops from 15.4691% to 13.29%. The interest rate risk element of investing in Treasury bills. Now, if you had invested in this paper last year, you most likely had taken it up at 18% or 17%. And then your paper matures now, and you find that the interest rate, the prevailing rate, is now at 13%. So you now have to take the new paper at 13%. However, had you taken up your investment in Treasury bond last year at 18% or 17%, you will continue to be earning your coupons at the rate at which you onboarded that paper, which is the 18%. So if we had two scenarios, one person opted for Treasury bonds and picked, for instance, the IFB at 17%, and somebody else picked the Treasury bills at the same rate of 17%, 2 years down the line, one person will be earning interest. The Treasury bond will be earning interest, would continue to earn you interest rather at 17%, and the Treasury bill investment, you'll have to renew it at now the new market rates of 13%. So that is what I mean by there's a risk in interest rate fluctuations. Okay? However, it's point to note or point of clarification, once you have taken your paper, the Treasury bill, even if rates were to reduce, it will not affect that specific paper. You will be affected when you want to reinvest. Now, what do you make of this? If you want to holistically, or if your purpose is to earn your passive income from investment in government securities, then you need to work towards building a portfolio in Treasury bonds. Not unless at the point of investing or at the point of entering these securities, the rates are low. If the rates are low, then I would recommend that you take up Treasury bills because they are short term as you wait for the rates to take an upward direction. Okay? For instance, right now we know the rates are on a downward trajectory. If the interest rates hit 10%, which they are going to be hitting by the way in a few months, yeah? If the rates hit 10% and you are interested in taking up investment in the government securities, you do not necessarily have to invest in Treasury bonds at that low rate. You can invest in the bills, Treasury bills, at the low rates because they are short term. Then once the rates take the different direction, the opposite direction, the rate starts rising, then you can take up the investment in Treasury bonds. I mean, you can now convert your bills. As your bills mature, you can now take up investment in Treasury bonds. The advantage that bonds have over bills is the ability to lock for you high interest rates over longer duration of time as opposed to Treasury bills. There are other differences between Treasury bills and Treasury bonds, which I'm not going to cover in this video. I'll do them in another video. This video, however, specifically, I needed you to understand the interest rate risk element of investing primarily in Treasury bills, especially if you want to be earning passive income from Treasury bills. My name is Belin. If you haven't subscribed to the channel, please press the subscribe button and see you on the next video.